Good morning all and welcome to another one of my videos. I have two pairs on watch today and those are West Texas Oil USD and Pound Yen. So I'm going to break them down for you now. Do apologize that I've been a bit inconsistent with the videos and the forecasts. I have a lot going on at home at the moment and I have a partner, or a fiance rather, who is incredibly ill. And when I say ill, I mean very, very ill. So I'm not going to dive into that too much, uh, discuss that too much, but I've got a lot going on at the moment and a lot more responsibilities because of my fiance's health than I previously used to have. So, with our health service being the way it is at the moment, lots of things have to be done at the drop of a hat, which I can't schedule because we don't know when these things are going to be done half of the time. So it is what it is, and we adapt. And that's what successful people do. They adapt as best they can in the situation that they find themselves, and they overcome. And overcome being the operative word. So, without further ado, let's break these pairs down for you now, which are West Texas Oil and Pound Yen. So, why am I looking at West Texas Oil USD? I'm looking at this because the narrative, the bigger picture, which I see before me, which I saw before me when I was creating my forecasts, are this area of value, which caused a bit of a sell-off last time around. We tap into this area by way of a 1, 2, 3 touch expanding pattern. So when the trend lines are, in this instance, sloping up and sloping down, that's what we call an expanding pattern. An expanding pattern with equal spacing between its touches, a clear middle section, a clear 1, 2, 3 middle section, nice big scoops between the touches that doesn't quite meet up with this by some distance. We actually, those of us who trade the Falcon strategy, we actually like these because typically when the 1, 2, 3s don't actually line up with an area of value and then price breaks out to meet that area of value, typically the sell-offs tend to be quite aggressive, and so we see here. So what's the psychology of these patterns that we look for? Are psychological patterns to a large extent. What's the pattern that I see before me? So I see this 1, 2, 3 touch structure. I also see a 1, 2, 3 touch structure leading into it with the second touch, which falls. Well, in this instance, the second touch does actually tag that area of value, but we push down quite correctively, giving me a clue that we'll push back up. We do push back up, and we start to sell off. And many people may have been thinking that this was a sell off down to these lows, down to here. However, when we get a impulse down followed by a correction which is this wide relative to the move down, we often get what we call an M style pattern. So much volume gets built up in a structure such as this that it ends up breaking to the upside because it just becomes too big for the natural impulse correction continuation, ebb and flow of the market to actually push this to the downside. So when volume builds up like this, the structure becomes more neutral and the continuation after the impulse and the correction becomes, more, it can go either way. So we build up all this volume, we get the M style pattern, so we get the move down, move up, move down, move back down, move up, and then we left with that M style pattern. We then come back down, price taps into that area, comes back down, almost retests all of this volume, and then comes up to fill this wick or fill a large proportion of it. Obviously, this is an attractive area of value, so sometimes price will sell off from there whilst more orders are coming in, or sometimes whilst there's still more orders left up there before the big sell-off. Okay, and you can see as I drill down, we then start to have a bit of a corrective move down. Sometimes we see these sell-offs which are quite corrective to start with, and quite often that can be just a lack of confidence in the market. And sometimes once it really does start to sell off, then the confidence comes in and the moves become more impulsive. So you can see the natural impulse correction, impulse correction, impulse correction, impulse correction. And you can kind of see these 1, 2, 3 touch structures, and then we get this the structures start to become a bit clearer. We get the liquidity point, which caused a big sell-off beforehand. So price moves up to this area quite aggressively, sells off quite aggressively, giving me a clue that that means that there's a lot of orders stacked in this area. I did discuss this in my previous videos. If you want to scroll back through my Trading View page, you will see where what I was saying about this, especially as we got there by way of a 1, 2, 3 again. We get a move down, but then it becomes quite corrective here. So that M style pattern that I was talking about, when we get a move down and we get a correction which gets wider and wider and wider and wider, often these end up not being an impulse correction continuation. They end up breaking to the upside because of the amount of volume that is built up in here. And one of the clues that price was likely to do that is because this second touch near missed here, we didn't quite, it's negligible, but we didn't quite tap into the area, meaning that many people would have still been seeing this as an area of value, and there may still have been orders in that area. So we build up all the volume, price pushes to the upside, we get that impulse correction continuation. We tap into this area and we sell off. Okay, so we tap out all those orders and we sell off. So just going a little bit more in depth into this because I have a little bit more time this morning, because I have only 2 pairs on watch and not quite as many other commitments to do today. So how do we get there? We get there by Y over 1, 2, 3 touch structure again. It breaks above. Many people would have seen this. If I just drill down to the 1 hour, many people may have seen this, and people often get confused as to what a retest actually is. But it comes up here, it comes back down. Many people may have seen this as a retest in this volume. They think it's going to the moon, etc., etc. What does it do? It just taps into all the limit orders that were sat just above here, and then boom, we push to the downside. So because we have tapped into this area of value by way of a 1, 2, 3 touch structure, and at the end of it, what we call an ending structure. So when we get just corrective price action such as this, and then right before the area of value, this ray line, we then get a piece of structure. Okay, so we get just corrective move, corrective squeeze, and then structure. This is what we call an ending structure. And we often see these. We get the first inflection point, we get the move up, and then we get the what I call the FOMO channel, where people are waiting for it to get here and they're not quite patient enough for it to do so, many of them. It starts to sell off and then pushes up again, which causes the ending structure because price was not ready to go. It wasn't ready to sell off. So now that we've tapped into the area by way of a 1, 2, 3 touch structure, I'm now pattern separating to make sense of the structure. So we have the impulse down, correction, we break out of that, impulse down, slightly larger correction, and this is a good sequence. Okay, so the sequence of these moves are quite good. Look quite reliable. We break out below here. We have that 1, 2, 3 touch structure and a 1, 2, 3. If I was to go on the 15-minute chart, you would see this more clearly. We break above, tap the limit orders and stop losses. Bang, we push to the downside. Price then comes back up, and we have this 1, 2, 3 wave move. Initially, I had this as the area of value, but you can see we tapped into that area and moved down very correctively. What does that mean? It means there wasn't enough liquidity at this area to push price to the downside. So if that's the case, what does price need to do? It needs to find liquidity from somewhere else. So what does it do? It pushes up, taps into kind of the back end of this. It taps into this hook point here, this little inflection point. Price sold off from this point last time around, meaning that there's likely orders in that area. So what happens? We push down again, but again we move down very correctively. Then what happens? We push up, we tap out all the stop losses and the limit orders, which were sat just above here, and no doubt sat just above this low here. What happens? We sell off. Okay, so price is either always looking for liquidity, it's either seeking liquidity or it's building liquidity. So what do we have here? We have a 1, 2. What happened? We tapped into this area here. What happened? We moved down very correctively. This is not an impulsive move. This doesn't, to me, look like the banks and the big institutions that have caused this sell-off, because it's very corrective in nature. And the fact that it's very corrective in nature tells me that some people are trying to sell this, whilst other people are placing orders above market price. Okay, given that the mid price is the average of the ask and the bid. So what does that mean? If people are putting orders in above market price, then where are they likely putting their orders? They're likely putting their orders at a high such as this. So with that in mind, what I'll be looking for today is the following. If I've just moved this to the side so that if this does shape up, I have enough room to put another risk to reward tool on the chart to the left of this forecast, so that I can cross-reference the two. If price corrects and a tight 1 hour flag, that should be a larger 1 hour flag, but you get the point. If a larger 1 hour flag forms, then I'll be looking to get short with a risk entry within it. Okay, so if we come up to here and get that, we get that 1, 2 potential 3 wave move within this 1, 2, 3, and then the middle section is just corrective. If I was to drill down, you can see to some extent we have that 1, 2, 3 wave move, and the clue for me that this was going to come up, which it may well do, is how big this correction is relative to this move down. When we see that, this often just becomes a middle section to push back up. So that's what I'm going to be looking for today, folks. And of course, if we push up to this area, if we get a solid 1 hour close up here, then I will drop down to that gives me permission to drop down to the 15-minute chart to look for 15-minute rejections in this area, and or even a 1 hour rejection. If we got a solid 1 hour rejection, let's say I missed the 15-minute entry for whatever reason, if we got a solid 1 hour rejection, I would get short after that, and then as you can see, I would be able to manage this to the low. If price came up again, let's say this got wider and wider, and then we got that M style pattern again, let's say price then pushed up to here, I would be able to manage it to these lows for something in the region of 4%. So that is West Texas Oil USD. So pound yen, I have an alert set, just to touch on it, I have an alert set just below there. If that below this high, if that doesn't trigger, then there's no need for me to look at this pair today. Okay. So pound yen. Why am I looking at this? I'm looking at this because you can see on the higher degree, if we just zoom out to the monthly, what's the narrative here? So we have this, I'm zooming right out to the monthly here, but there is a point to this. We have this big move down here, sharp move up, sharp move down. What does that tell me? This sharp move up followed by the sharp move down tells me there's a lot of orders in this area. So we move down to here. We do have a near miss to here. Price does often find its way back down to a near miss to when we get close to an area of value, but we don't quite tag it. But we're so far away from that, you can see that we're kind of headed back up to this area. Now, why might we be headed back up to this area? Well, we sell off aggressively. We scoot back round. We create a 1, 2, 3 touch structure, which taps into this area, and then we see the big move to the upside. Now, one of the reasons that this could actually break out higher, because if you look at this impulse down relative to this correction, if we do push up to this area, this would be so wide relative to this move, initial move down, that we could break even higher. But basically, we've just tapped into this area by way of a 1, 2, 3, and then we've seen the impulse correction, impulse correction, impulse correction. Just looking for further continuation, because it looks very clear to me that we're headed to this high there. Now there's nothing else in that area. The next high is up here, so it looks clear to me that we're headed in this direction. So as I drill down, you can see the impulses and corrections very clearly. So the sequence is good. Okay, we start off a bit corrective. As I said, often this happens when there's a bit of a lack of confidence in a move. Then we get some more impulsive momentum. Then the confidence starts to come in, because the corrections start to look more reliable. We start to get that 1, 2, 3. Price taps the liquidity. It moves up. We get that this move down here. We get this 1, 2, 3. It pushes up. We then get this 1, 2. I've just cut through this volatility spike. Just because it doesn't really make sense in terms of the structure, but you can see as well that it did actually tap into this area as well, so it likely found liquidity from down here, pushed up. We got the 1, 2, 3. We get that kind of lack of confidence, and then price pushes up once the confidence comes in. So we see these psychological patterns repeat themselves, and then we have an impulse correction continuation. I was talking about this in previous videos. We get that 1, 2, 3, which falls just shy of this kind of tiny inflection point here. We break out of there. Many people would have thought it's going short. Instead, it breaks straight back into the pattern, and then we get this correction here. where are we? There we go. So we get a tiny correction there. We then get a impulse, smaller correction, smaller correction, impulse, smaller correction, impulse, larger correction. So the sequence is quite good on this one. We then get a small correction just inside here. Now, you've got to remember, a lot of volume has been built up in here. So when we see a tight correction, usually just above, but around the top of this area, then it's likely that that momentum that was built up in here will carry this to the upside, and so it does. So we move up again. We have a bit of a kind of sloping up running channel. We break out of that tight correction, move up, slightly bigger correction, move up. And now we seem to be forming that larger correction. So what are we looking for today from this pair? This may not be ready at the end of the day. I am aware that there's a lot of economic data being released today, which may act as the catalyst to move this in one direction or the other. So what we typically see, those of us who trade the Falcon strategy, is that news creates volatility, not direction, but often that volatility can help our entries shape up a little more sooner than they otherwise might have done. So what I'll be looking for today is a 1, 2, 3 touch move. You can see this expanding pattern, which taps into an area of liquidity here, which caused a move up last time around. Okay, now I'll be looking for the risk entry. This is a 4-hour structure, and what I mean by that is it's a structure that I can see visible even on the 4-hour chart. So I'll be looking for a 4-hour candle to close in this area, and then that will give me permission to drop down to the 15-minute chart. I don't know why I did have an annotation on here. For some reason, it has vanished from my forecast, but I'll be looking for a move down here, and then I'll be looking to call the bottom and to get long on this pair. And I don't know where my annotation has gone, but I'll fix that after this video. And as I say, if this, so long as the move down to this area was not impulsive, so long as it's got 30% exhaustion to it in terms of this move all the way down to here. Of course, if we do get down to here and we get down here very very aggressively, then I will wait for the push back up, followed by a flag, and then I would look to get long either within or on the break of the flag. But as you can see, I've got an alert set there. So if we did get there very aggressively, I would have ample time to reforecast. I don't like to have too many forecasts on my chart at any one time, just to keep things clear and minimalistic. But if we did push down to that area and we push down there very aggressively, let's say the news caused that move to happen quicker than it otherwise might have done, all these data releases that are coming out today, then I would simply wait for the pushback up on the flag. And if that alert is triggered, then I will reforecast and put that entry on the chart as another possibility. But that's all I'm going to be looking for. And of course, if that entry shapes up, then we have something in the region of 8.5% just to the high of this structure in case it starts to form something else. And of course, if we kept going to that higher time frame target, then you don't need to be a genius to work out that there is a lot of profit potential on the table. So that is my forecast today. I'm going to just amend this, as I said, in a moment. But I hope you've enjoyed this. I hope it's provided you with some value, and I will be back tomorrow, present commitments and so forth in mind, and providing I actually have a pair or pairs on watch. But for now, have a great day, and I will speak to you again soon.